Okay, I think we're live. So thank you very much for joining. What we're going to talk about today is what I call the LinkedIn performance gap, and more specifically, what the highest performing commercial teams are doing differently than their lower performing peers. So quick recap on what we're going to cover then. I'm briefly just going to set the context on why LinkedIn matters. I won't dwell on that. Presumably, if you're on this webinar, you've already got a sense that LinkedIn actually matters, but I'll just recap on some of the data behind that. I'll give you a very quick overview of who ClickPop are and what we do. Then we'll get into the interesting part, the data from the survey that we've run this year. And then finally, I'm going to leave you with some practical actions that you can take away and implement in your organization. So before we get into the data, why LinkedIn specifically? Well, look, unless you've been living under a rock for probably the last 5, maybe even 10 years, LinkedIn is now just operating at a scale where you can't dismiss it. It's not niche. It's not an optional platform. There's over 1 billion members globally. There's more than 67 million companies represented on their platform. In the UK alone, there's 45 million members. And that basically means if you're in a white collar profession, almost certainly you're going to have a LinkedIn profile, and probably you're going to be logging in regularly. So LinkedIn's data shows it's not just passive usage. Around 54% of members log in at least once a week. So people aren't just creating profiles and forgetting about them, they're actually using it. From a commercial point of view, two stats really stand out. First is that 80% of LinkedIn users describe themselves as having influence over business decisions. So that doesn't mean that they're all the key decision maker. As we know, B2B buying tends to happen via multiple stakeholders, multiple people's opinions need to be involved, but it does mean that these people are part of the buying conversations. The second stat is 70% of marketers report a positive ROI from LinkedIn activity. So that doesn't tell us how they've achieved it, but it does tell us that value is being created on the platform. So LinkedIn clearly matters. And in this webinar, we're going to be looking at what it is that commercial teams are doing that help set them apart and be successful in their roles on LinkedIn. Before we get onto that, a little bit about ClickPop. So I'll start actually with, I suppose, my love affair with LinkedIn. So this is a screenshot of a project that I posted on Upwork in the very early days of LinkedIn. So at the time, I was working for a very small HR software and payroll company. And I'd noticed a bit of a strange coincidence that when I looked back at the number of new customers that we had won over the course of a year, it just so happened that nearly all of them had had a new head of HR or new HR director join that company a few months beforehand. So that was interesting to note. And at the time, I'm not even sure that LinkedIn Sales Navigator even existed. If it did, it certainly didn't allow you to filter by people who are new to role or new to company at that time. So I had this software developer build me a tool that essentially scraped the careers pages of every website that I could find. And it was looking for mentions of any vacancies, any hiring opportunities that had HR manager or head of HR in the job title. And that would give me a heads up of who to target with our sales and marketing activity. Thankfully, LinkedIn have ended up making this whole process a lot simpler. They've launched Sales Navigator. Within there, you've got the ability to filter by people who've changed jobs recently, changed companies recently, all that sort of stuff. But the principle remains the same. So when a business makes a purchase, at its core, it's still people buying from other people. And more often than not, those businesses and those people give off some kind of signal, which means we can target both our paid and organic marketing to them. And it means that we can get the right message to them at the right time and hopefully influence their buying decision. And that's where ClickPop comes in. So ClickPop is a LinkedIn first marketing agency. We help B2B companies to generate more demand, convert that pipeline into sales, and crucially, help them retain and expand existing customer accounts through smarter, more strategic use of LinkedIn. And we've developed a whole bunch of unique systems and processes that include things like intent data and paid reach and organic content, so that not only are we using LinkedIn to build visibility, but we're using it to build relevance and credibility and trust. And it's that trust and particularly human connection that turns visibility on LinkedIn into revenue. So onto the data then. And before we get into the findings, I suppose it's worth kind of grounding this in who the data actually represents. This is all self-reported data from a survey that we ran in February this year. So it had 250 respondents, and we targeted people who had a sales or account management type role. One of the screening questions that we asked when people were starting the survey was whether their employer focused primarily on selling to other businesses or directly to consumers. Anyone who said consumer was screened out of the survey straight away. So we can be confident that the data represents B2B buyers, B2B sales teams, B2B commercial teams, the sorts of people who LinkedIn will have an effect in one way or the other on their success in their role. In terms of the roles represented, 42% of them say that the majority of their role is prospecting. So think of people with, say, business development or sales development type roles in their job title. 26%, so about a quarter, are focused on nurturing and closing opportunities. I would imagine that those sorts of job titles are things like account executive or salesperson or sales consultant, that sort of role. And then 27% stated that their primary focus is on managing and growing existing accounts. So think of account managers and perhaps customer success teams. There are an additional 5% that fell into an other category. So those are going to be roles where they've got an overarching visibility across the whole revenue cycle from prospect through to existing customer. So think of things like chief revenue officer, chief commercial officer as the job title. And in terms of seniority, it's a real balance. So 12% were entry level, 17% were individual contributors, but at a senior level. 44% were managers, 20% said they were director level, and 7% said they were in the C-suite. So we've got a really balanced view across the whole commercial life cycle in terms of roles and responsibilities, and also in terms of seniority as well. Now, the first question in the survey that we asked it was really simple. It's just back to basics. How often do you actually log into LinkedIn? And when you break this down by role, the differences are pretty stark. So if you look at people whose role is primarily prospecting, 45% of them said they're on LinkedIn multiple times a day. That then drops to 22% for people who say their role is mostly focused on nurturing and closing deals. And then if you're an existing customer account manager, only 10% of those say they log in multiple times a day. So already you can see a little bit of a trend, a little bit of a pattern emerging. The closer the role is to new business creation, the higher the LinkedIn activity. Now, that in itself isn't hugely surprising, but it does get more interesting. So if you look at account management and customer growth roles, around a quarter, so 24% say they log in less than once a month, and 7% say they never log in at all. That's shocking. That's almost embarrassing, right? And there's absolutely no reason why, if LinkedIn is somewhere that your target market is spending time in the early stages of their buying journey, that simply because they've become a prospect or even a customer of yours, that they somehow stop participating on LinkedIn. That's absolutely not the case. If they're on the platform for one part of the journey, they're almost certainly going to be on the platform when they're an existing customer as well. By and large, people ignore marketing emails now. I know that I certainly do. LinkedIn, I would argue, is one of the few places where you can stay visible and build relationships and spot opportunities between formal touch points. So what this data then is suggesting is that this difference in behavior between teams, in all likelihood, is a massive missed revenue opportunity, particularly on the retention and expansion side of your relationship with your customers. And then this slide takes it a step further. So this isn't about logging in, it's about creating content. So specifically, we asked, excluding liking or commenting on other people's content, how often do you post unique content on LinkedIn? So it excludes the more reactive type of content, like liking or commenting on someone else's content. It's all about producing your own content on LinkedIn. You see a very similar pattern emerge. So people in prospecting roles are far more likely to say that they are posting daily. Those in nurturing and closing roles tend to sit in a bit of a middle ground, a few times a week, maybe once a week. And then you get to account management and customer growth roles. 63% of them say they post less than monthly or never. Again, that is a significant drop off. Like I said before, if LinkedIn is a place where your prospects are, it's almost certainly a place where your customers are. And if it's a place where relationships are being built over time, you'd expect the people responsible for retaining and growing customers to be highly visible there. But the data suggests that the opposite is happening. Now, if you're on the webinar last month, you might recognize this slide. This is actual observed behavior. It's not self-reported. It shows the percentage of employees who posted at least once in the last 30 days, broken down by function. This data comes from LinkedIn's own data. I've just grabbed it from LinkedIn Sales Navigator and doing my own research. So the data is solid, it's credible. Now, number one, the numbers are much lower. Compared to the self-reported data about are you posting at least monthly, the actual evidence would suggest that the numbers are much, much lower. So people are overestimating how often they are posting, or they're at least over-reporting how often they are posting some unique content on LinkedIn. The truth is, depending on the role, depending on the seniority, depending on the company size, we're looking at somewhere between about 5% and 25% of people are actually posting anything once a month or more on LinkedIn. So there is a clear gap there. There's a clear gap between what people say they're doing versus what's actually happening. And when you break this down further, the pattern still holds. So what I would say with this is that directionally, the survey is useful. Whilst we've got that gap between what's actually happening and what's being self-reported, directionally, the difference is enough that it's a reliable indicator as to what's going on. Okay. Now, this matters because it means a lot of employees and teams are overestimating how visible and active they really are. And that might be skewing their behavior. If people think that they're posting more often than they are, it probably means that they're going to be, in reality, doing it less. And then the next question really is trying to answer the more commercial question of, does any of this actually matter? It's one thing to know how active people are on LinkedIn. It's quite another to have a sense for whether it's actually impacting sales revenue and the growth and success of the organization. And so we looked at how LinkedIn activity relates to whether people in a sales role, in a commercial role, whether they are saying they expect to hit, exceed, or miss their targets. Again, this is self-reported, so treat it with a bit of caution. But even if people are overestimating, the pattern is still meaningful, and the pattern's pretty clear. People who say that they post daily are significantly more likely to also say that they are expecting to exceed their targets. To put a number on that, 28% of daily posters say they expect to significantly exceed their target. And then at the other end of the spectrum, you've got people who are saying they never post, or maybe they post less than monthly. They are much more likely to say that they're just going to scrape their target. Maybe they hit it, but they might miss it as well. So again, this doesn't prove causation, but it strongly suggests that consistent visibility and activity on LinkedIn is associated with stronger commercial outcomes. And when we compare that to actual LinkedIn data that we've analyzed previously, we see a similar pattern show up. So in the last webinar, we looked at real activity data, not surveys, what people are actually doing, and we matched it with the growth rates of the organizations that they're employed by. What we found was that people working in high growth companies were significantly more likely to have posted on LinkedIn in the last 30 days than those in slower growth organizations. And that held true across sales roles, business development, account management. It held true across mid-sized companies and enterprise organizations. So it's not just perception. There is that consistent signal across both self-reported and actual observed data that higher LinkedIn activity is associated with company growth and stronger commercial outcomes. Again, it doesn't prove causation, but there is consistency enough to take it seriously. And that trend that I mentioned for the mid-sized organizations, it exists at enterprise businesses too. So for companies with 1,000 or more employees, we considered high growth companies to be ones where their headcount had grown by at least 10% in the last year. Slow growth companies were businesses whose headcount had stayed static, or maybe it had shrunk. Something else to point out on this slide, it applies to the previous one as well, is that the greatest difference in participation between the high and low growth companies is the sales and account management teams. They've got a massive difference. So whilst the CEO might participate on LinkedIn more, actually there's very little difference in participation rates between CEOs in high versus low growth companies. Where it seems to matter most is when you get closer to the customer, when you get closer to the prospect, the people who are in business development and sales and account management roles, their participation on LinkedIn really does seem to matter to the commercial success of the organization. So the self-reported data, it does seem to be significantly inflated. That's probably to be expected. But because it follows a similar pattern to the actual participation data that we're seeing on LinkedIn, it's definitely a trend worth paying attention to. So we've looked at posting behavior, but I wanted to take it back, I suppose, really back to basics. All right. And so we asked a question about the number of connection requests and engagements that people were having with customers and prospects. And again, there's some clear trends. So only 10% of prospects, only 10% of people in a prospecting role say they don't send any connection requests in a week. This increases to 19% for those in nurturing and closing roles, and it jumps to over 50% for those who are responsible for managing and growing existing customers. That's mad. I mean, if I was the CEO of that company and half of my customer success team were never making any new connections with their customers, I'd be tearing my hair out. At the other end of the spectrum, those in prospecting roles are much more likely than the people who are closing new deals and managing existing customers. They're much more likely to have sent 11 or more new connection requests per week. Perhaps that's to be expected. So if you are in a prospecting role, effectively, you've got the entire market to go after, haven't you? If you're in a customer team, perhaps you're only looking after a handful of customer accounts. However, I would argue that those people in customer teams should be trying to build and maintain relationships throughout the entire account, not just with one or two people who they deal with frequently. So the fact that more than half of them are saying that they never send any new connection requests is absolutely infuriating. The chart on the right then shows how many meaningful engagements commercial teams are reporting having on LinkedIn. So basically, very similar trends seem to exist. Customer teams much more likely to say they're having zero meaningful engagements. Prospecting teams more likely to having reported lots of engagements with prospects. And it does seem to be causal. I suppose that makes sense, right? So the more connections that you make, the more meaningful connections and interactions you're going to have. So it's not just coincidental. And this table, it shows how that trend flows throughout. So the more connections you have, the more relevant your network becomes, the more opportunities you're going to create for conversations. It sounds obvious, but this shows that the basic level of activity is not happening consistently across teams. And it is a missed opportunity. It's a missed opportunity, particularly for customer retention and expansion. And then we wanted to really understand why this might be. So there's obviously something going on that's causing people, even in the same company, to be using LinkedIn less in their commercial role. So we looked at what tools people say they're using, specifically whether they're using the free version of LinkedIn or whether they have access to LinkedIn Sales Navigator. Again, the pattern's quite telling. So in prospecting roles, more than half, 57%, are reporting having access to LinkedIn Sales Navigator. In nurturing and closing roles, that drops to 31%. And in account management type roles, just 11%. So effectively, the investment in LinkedIn tools is heavily skewed towards new business generation. And that's a significant blind spot because LinkedIn, I don't believe, should just be used as a prospecting tool. It is one of the richest sources of data that you can get about your customers, about the relationships they're having, about what's exciting for them, what they're interested in, what's going on in their lives, buying intent, stakeholder movement, changes at an account level. And yet the people responsible for retaining and growing revenue are the least equipped to use it. As before, it's kind of interesting to understand that there is a difference in adoption of LinkedIn Sales Navigator between roles. The next question then really is to understand, does any of this actually matter? Does any of this lead to stronger commercial outcomes for those teams or not? And so we looked at LinkedIn Sales Navigator and how it relates to whether people are reporting that they expect to significantly exceed target or not. Again, the difference is pretty striking. Much like before, the difference is quite stark. Those people who say they've got access to LinkedIn Sales Navigator, 73% say they expect to significantly exceed target. Only 27% say they don't. Compare that to the people using the free version of LinkedIn. Only 47% say they expect to significantly exceed target. More than half, 53%, are not expecting to. So you've effectively got 73% versus 47%. That's a meaningful gap. What this is saying is that if you're in a commercial role and you've got access to Sales Navigator, you are 55% more likely to say that you expect to significantly exceed target than your peers without Sales Navigator. Again, self-reported. So take the exact percentages with a bit of a pinch of salt, but directionally, it is clear. Access to better tools correlates with higher confidence in exceeding sales targets. It reinforces quite a simple idea. If you want people to perform at a higher level, you need to equip them properly. You need to give them the tools to do their job. And if we zoom out and then summarize really what we've seen so far, what we've spoken about so far, is there is a really clear pattern emerging. LinkedIn usage and investment in it drops as you move along the revenue cycle. At the top of the funnel, prospecting, you've got high activity, high tool adoption, consistent usage of LinkedIn. As you move into nurturing and closing, and especially customer account management, activity drops off sharply. You can summarize it with LinkedIn usage decays as revenue risk increases. So the parts of the business where revenue is most at risk, you're already getting that revenue, all right? So it's at risk. Then retention and expansion, long-term customer value, they are the areas where LinkedIn is used the least. It's slightly counterintuitive, and it's a bit of a trope. It's so often said that retaining your existing customers is much cheaper, more efficient than trying to top up new accounts. It's cheaper to retain a customer and to grow a customer account than it is to win a new account. But what the data is showing us is that businesses are actually treating it in the opposite way. So it's a behavior gap, but it's also an investment gap across teams. So it's something to do with how organizations are supporting or not their commercial functions to actually succeed in their roles. And it isn't just an investment gap. So culturally, there are clear gaps as well. What this chart shows is it's just the total data, and we'll get onto some filters in a moment, but it's the total data answering the question, what does LinkedIn actually help you do in your role? And the options were identifying new opportunities, starting conversations, nurturing deals, closing deals, and keeping track of customers. Across most of these, the most common response was sometimes, so a bit non-committal, all right? The exception was customer tracking was the outcome with the highest level of people reporting that LinkedIn helps them frequently to do that. Now that's interesting because in the previous slides, we've seen that account management type roles are the ones participating least in LinkedIn. They're the ones that have got the least investment in tools to do their job on LinkedIn. And yet they're saying that LinkedIn's frequently helpful in terms of keeping track of what's going on with their customers. That's interesting. And then we broke it down. We broke it down by whether people felt confident in creating content on LinkedIn that's going to appeal to their ideal buyers, to their customers. The chart on the left is from people who report that they are very or somewhat confident in creating content on LinkedIn that's going to appeal to their ideal buyers. The chart on the right shows responses from people who say that they are neutral, or perhaps they're not confident in creating that type of content. Comparing the two charts, the scale's the same. Comparing the two charts, the gap is huge. People who are confident are far more likely to say that LinkedIn helps them find opportunities, start conversations, progress deals, close new business deals, and stay connected with customers. In many cases, that difference is 20 to 40 percentage points. And in relative terms, that's multiples of times higher. So this isn't about being present on LinkedIn. In fact, you could argue that this is more of a forward-looking indicator of presence on LinkedIn is actually about knowing how to use it effectively. A similar trend exists when we look at the culture of the organization as well, whether leadership actively encourages LinkedIn usage or maybe it's sort of somewhat encouraged, maybe it's frowned upon, maybe it's actively discouraged, or maybe LinkedIn, maybe the leadership is just somewhat neutral about, they're indifferent. They don't really care whether you're using it or not, just get the job done. Where LinkedIn is actively encouraged or supported by leadership, people are much more likely to say it helps them succeed in their role. Where it's neutral or even discouraged, usage drops. Usage drops, and so does impact. I've certainly witnessed this in my life. So I was in a role previously leading the marketing team for a SaaS business. It was acquired, so happy days. Everyone's had a good exit and all of that, and we got acquired by a private equity company. And in their wisdom, one of the first things the new leadership did after they'd acquired this business was issue a decree that nobody was allowed to post anything on LinkedIn unless it had been approved by the marketing team or by the management team. Unsurprisingly, employee advocacy overnight dropped off a cliff. And that was something that we had worked so hard to build. So if the culture of the organization doesn't support people participating on LinkedIn, don't be surprised if people don't participate on LinkedIn. The same thing is apparent based on enablement. And by enablement, we mean whether individuals have received any training. Where LinkedIn is supported with training, people are much more likely to say it helps them succeed in their role. So it isn't about individual behavior at this point. This is at an organizational level. It's about the systems and processes and tools and investments that you're making to help people do their job, the tools that people have available to them, the expectations set by the leadership team, and the capability of your people built through training them to do things effectively. If you can get these things to align, LinkedIn can become a consistent commercial lever and not just something that some people use some of the time when the mood strikes them. Now, I've said a few times that we can't prove a causal relationship here. And there's some obvious limitations with self-reported data. People overestimate, people overstate things when it reflects well on them. But it is still interesting that when you compare the survey data, when you compare the self-reported data with what we've actually observed with the real data that LinkedIn can provide, you see the same sorts of patterns show up. So even if the exact percentages aren't perfect, the direction of the trend is very consistent. And the differences that we're seeing are large enough that it's unlikely just to be noise. So the sensible conclusion isn't that more activity on LinkedIn is going to guarantee better performance for the sales team or for the business, but it is that there's a clear relationship between how teams use LinkedIn and how they perform commercially. There does seem to be something going on. Now, even though we can't prove a direct causal link, I'm going to give a sort of logical argument why participation on LinkedIn would be a driver of better commercial outcomes. So if you can get your sales and your customer and your business development teams more active on LinkedIn, awareness is going to increase. Familiarity with the people and with the brand is going to improve. Trust is absolutely crucial. Trust is going to build faster and it's going to build stronger. Now, if you're in an outbound team, if you're doing outreach, if you're business development, your outreach activity, I would argue, is going to be more effective. Prospects already are going to recognize who you are, the things that you believe in. If it's going to be, say, a closing role, maybe an account exec, a sales executive type role, it's likely to improve your win rates for your existing pipeline. I cannot imagine that a salesperson who's consistently showing up on LinkedIn, posting relevant, interesting content is ever going to damage their chances of closing a deal. And then for existing customers, regular exposure to things like product updates, bug fixes, new features, upcoming events, it's going to increase the relevance of your organization and stickiness. I've certainly seen it. I've seen examples where customers have said in a bit of a shirty way, "Oh, I didn't know that this event was taking place." And then you look back through the CRM and you can see this person's been sent the email 10 times and they've opened it 3 times, but people have email blindness. You just don't see marketing type emails. What people do pay attention to is stuff that's appearing in their feed on LinkedIn. It's their sort of personal safe space. It's freer of spam than your inbox. None of this is ever going to guarantee growth on its own, but taken together, it helps explain why participation shows up so consistently alongside it. And then if we accept that there are clear differences in how LinkedIn's being used, even in the same organization, it's differences between commercial roles. At the prospecting team, it's widely adopted, not perfectly, but it's there. As you move further down the revenue cycle, usage drops off. In many cases, usage drops off quite sharply. That is a gap. And then really then the question becomes, well, what are we going to do about it? Number one, build capability, not just awareness. Educate your people. We saw the impact that confidence in your ability to actually produce content that's going to appeal to your customers, to your prospects. That is a massive, massive lever in actually getting people to participate and realize value. So show what good looks like. Give real examples of posts that generate conversations and not just impressions. Invest in training in your people. Number two, make it easy, remove friction. When people understand LinkedIn, they often don't act because it feels time consuming. It's a sort of an additional thing for them to do on their day job. So reduce friction, give them prompts or themes, help somebody who's in a business development role, in a sales role, in a customer account management role. Give them prompts or themes or examples of stuff that they can rehash themselves. So they're not just staring at a blank page. It's really hard. These people aren't people who've worked in marketing roles for 10 to 20 years. They're going to have a little bit of blank page fear when they're asked to write something. Make it easier, and they'll participate more. Make it safe as well. So remove perceived risk. We've seen in previous webinars that there is a massive drop off between more junior roles and more senior roles in their participation on LinkedIn. The more junior roles, the ones who are maybe a bit fearful about saying the wrong things. What if it doesn't land properly? Not even sure that they're allowed to be doing it. They are going to be participating on LinkedIn much, much less than someone in a director or more senior role. So create psychological and organizational safety. Give them guidelines on what's appropriate. Give them examples of posts that's good enough for them to share. It doesn't need to be perfect, polished content from the marketing team. In fact, it's pretty typical that you would see a little bit of rough and ready content is going to perform a bit better. People are kind of tuning out the stuff that's too polished, too perfect. Model it, show that leadership are actively participating. Remove the fear of getting it wrong. And when people get it right, praise them publicly. And then finally, motivate them, give them a reason to care. If people understand that LinkedIn participation is actually going to help them succeed in their roles, they will be more likely to prioritize it as part of their day job. Link it to the pipeline and revenue metrics. Don't focus on vanity metrics like likes or impressions, but actually show that the accounts that they're engaging with on LinkedIn are more likely to close, more likely to stick around, more likely to expand their revenue, help them to be successful in their roles. And if you can show people that this is actually going to help me hit my sales number, their behavior is going to change. And if it doesn't, you are well within your rights to start introducing it in your performance reviews. As long as you've got the evidence, as long as you're tracking it, why wouldn't you do that? If you can put these four things together, you're going to move LinkedIn from something that people use occasionally when the mood strikes them to something that becomes a consistent part of how your commercial team operates and succeeds. So hopefully you found all of this interesting. Hopefully you found it useful. If it's raised any questions about how your own business, how your sales teams are using LinkedIn, I am offering a free audit. So we'll look at how well your business is using LinkedIn. We'll look at participation. We'll look at how you're stacking up against your competitors. We'll look at your ads and how they're working for you or perhaps not, and practical ways that you can make LinkedIn work harder for growth. There is absolutely no obligation to do anything after the audit. So you'll just get some useful insights and some guidance on what you might want to do about it. If you're interested, connect with me on LinkedIn, scan the QR code. That will take you to my LinkedIn profile. Just follow up by email and we'll take it from there. So that's about it. Thank you very much for joining. If you do have any questions, I look forward to hearing from you very shortly. All right, many thanks.